Well, welcome everybody to this month's stock market review. And this is basically going to be we're going to be together for about a half an hour. And I'm going to run over the different indexes, see how they're doing. You know, I'm getting a lot of questions since the presidential election yesterday. The markets have jumped up today, and I'm being asked, does this change the forecast? So we're going to take a look at the charts and see what effect it's had so far from a technical perspective. And we'll get to that in just a moment. All right, so let me just run through really quick and go through some of the administrational items. First thing we always ask everybody to do, give us a like out there. That helps the channel. All right, first also too, we want you to be aware of the risks involved in trading. We don't work in a realm of guarantees when we're in the market. Everything is probabilities, whether you're investing or trading actively. We're always making probable guesses at the market. We usually work within an edge in the market where that puts the probabilities on our side, but we also have to protect those times that we're wrong through risk control. So that's really important. So I have a good solid risk control program in place. I've got a number of books out there in the marketplace that can help you with that. And you can go to our website. I'll put some links in the recording when you're watching that below, of course. Also, to make sure you always talk to your financial advisor before acting on any information that you get from the web. All right, so let's jump right into the chart. I'm going to show you first charts that I put out over the weekend. This is before the election, and then we're going to zero in on what happened in the last couple of days since the election. So let's first go over the overall aspect. So I've got some information on this chart that I want you to pay attention to, and that is these numbers here where we call short-term support. We have a couple of those levels, and then our major support level here as well. So the important part of these levels is that they represent key levels of support that have been put in during this particular uptrend that we've been in really since November of 2023. All right, so it's been quite a while. This target zone that we have highlighted up here is actually a long-term target zone that we basically drew fib extensions going all the way back to 2009. So this represents a very significant area in the market where this bull trend should come to an end. And this is, of course, relating to the bull trend since 2009. So keep that in mind. So we had a couple of trend lines here. All right, one was broken recently. The other one was approached. But again, those are just trend lines. The major trend line here was not broken, and these support levels were not broken. So we identified this as some profit taking or even a pullback while the market takes a rest while the election unfolds. If the election had taken a longer period of time before a winner was announced, we would not have gotten the jump up that we got this week. Instead, it probably would have remained somewhat bracketed in this area. But since the election, because the market doesn't like uncertainty, don't forget that. So the market actually was decisive, and it was decisive in a day, which is kind of unusual. But actually a good thing for the markets because then it could decide what it wanted to do. And of course, it jumped up from here. So we're going to look, when we look at the live chart, what I want you to keep in mind here is that this target zone that we're in that represents the top of what we think is a long-term, fairly long-term bull market, all right, really is between 40,281 up to 47,000. So we can go up to 47,000, roughly 425 points, and still be within a high probability zone, which is a fib extension, where 70% of the major bull markets end. And so we're kind of in that zone now based on going back to 2009 and drawing in all the fib and Elliott Wave markers. So that's kind of where we're at now. So any move up to there is certainly within range. Now, 15% of the time they go higher. So could that happen? Sure. Okay. But we're going to have to wait and see what the market looks like when we get into that upper zone. Now, if you have any questions, feel free to ask them in the comments area. But that's kind of what we're paying attention to. I'm not too concerned. We'll have some more support levels appear. This could be a support level because this jumped up this week. So we're going to probably mark this in our next webinar as one of a support level we'll keep an eye on. But as we said, remember if you've been with us for a while, really for the last 6 months, what we said is probably we're going to be in this bull market sometime until after the election. Well, here we are after the election. We're still in it. So we're spot on with that. A lot of people were thinking we're going to get a major sell-off this summer. And really, nothing broke any of the bullish trend lines or support areas all summer. And so we really weren't in a place where we were ready to call the bull market over. And I'm glad we didn't because, of course, it has gone up. So the technicals don't lie. Trend lines don't lie. Support levels don't. Just stay with the market based on that information and you'll do well. So right now, that's kind of what we're looking at. We've got some room to move up. But I do want to say one more thing, and that is when this bull market ends, and we think it's going to end somewhere in this zone here, then we're looking at a fairly significant bear market. And so that's kind of interesting, all right? So, things are very positive right now in the market. So that causes you to ask a question, what's going to happen to make this thing sell off now that we've got a president favorable to the markets? So is that going to be an outside event? We can't guess. We don't know, all right? But that is a little disturbing when you think about the fact that we are in a target zone that can't go too much higher. And so therefore something's got to come along to disrail this bull market. And I have no idea what that'll be, okay, whether it's economic or something different. So we're going to have to buckle our seatbelts and see what happens. But in any case, we'll get to the live charts in a minute and see if that tells us a little bit more of a story. On the longer term chart, this is the monthly chart. And basically, when we do go into the next bear market, which we think will probably be in 2025, that this will be represented by this pullback here. And then eventually it will bottom and it will recover and go back up. So on the monthly chart, where every price bar represents a full month, so this is a very long-term chart, we basically are still going up, but when the bear market comes, you'll see it on this chart as well, and it'll be a fairly significant pullback, but then the market should recover and go higher. So all these markets, go up, they come down. It's the ebb and flow of the markets. All right, S&P 500. Now, what's interesting about this, we were in the target zone here, but the target zone here for the S&P 500 is between, based on a fib extension, 56.52 all the way up to 69.88. So when we look at this market here, we've just kind of entered it, very similar to the Dow, but actually the Dow has entered it a little bit deeper. So this isn't quite as into it as the Dow. So it looks to me like there's probably some more room to the upside. And again, look at all the trend lines on the long-term charts, not broken one bit yet. The next chart I want to show you is the NASDAQ market. And if we look here on the far chart on the right, which is our weekly chart, I went ahead and drew the target zone on this chart, but we haven't even hit it yet. Now, we probably may have hit it this week with this recent back to the upside move after the election, but that particular target is between 18,850 to 24,188. So the NASDAQ has got quite a bit more room, it looks like to us, to go further higher before we are really in a situation where we can get concerned about a change in trend. So all the charts, and we're going to look at currently, I keep saying this, but we're about to do it, look at the current charts, and we're going to see how the election results have definitely changed things a bit. All right, now I do want to cover GBTC. GBTC is a very popular ETF for Bitcoin, and we have been actually forecasting Bitcoin to get a lot higher, and it also, of course, will bring up GBTC. So our target on GBTC is 72.14 to 92.41. We're going to look at the current results that we are seeing now but I think we're probably close to around $60. So we're up in this realm here. And I would not be surprised if we take out this high at some point over the next probably 3 or 4 months. So I think we're kind of on our way up there as well. Doesn't mean you won't get a pullback, but I think we're still going quite strongly now to the upside. So I think this was a major bottom. Now, if you remember, I also marked this area as a buy area. So hopefully many of you were able to take advantage of that, because that was a Fibonacci retracement. And in terms of Elliott Wave, that was a beautiful wave for target. And that's a good buying point to take you on up to the target of wave 5, which will be up in here. And of course, some of our indicators here, like the PTF, 70% accuracy rate, is calling for more highs above the old high that occurred basically earlier in the spring. So I think we're kind of, on our way up there. So bullish on the cryptos right now, for sure. All right. I want to jump to real estate, and then we'll go and take a look at some live charts here. The real estate market is a very interesting market right now. It's very local, depending on where you are. Texas has experienced significant price declines, whereas California and parts of New York have not. So it all depends on where you live, right? Location, location, location. But I don't think, based on this chart, and I'm going to go over this a little bit, that we can come away with any conclusion other than the real estate market currently sits in a bubble. And let me explain that. So this is a 50-year chart of the Case-Shiller index. And the Case-Shiller index is tracked on top of the CPI. And in this case here, the Case-Shiller index is the red line. So I'll mark this with a CS. And the CPI down here is the black line. All right, so the Case-Shiller index represents the average price of homes in the United States. Average. So remember, real estate is very local, so this is an average. All right, the CPI under that represents inflation minus certain things. They leave certain things out, like I think energy and things like that. But there you have it, okay? So if we go back 50 years on this, you can certainly see that real estate, represented by the Case-Shiller red line, has always maintained a distance above the CPI, which makes it a good investment because it is a good hedge against inflation. So not only do you get a place to live, but you get an investment. So it's always a good place for young folks to start building wealth. They buy a home, they have to live in there, they can raise their family in there, but at the same time, they're also usually borrowed money in terms of a mortgage to get in. So they're also getting a mortgage deduction at the same time their house is increasing in value, keeping up with the CPI. All right, so all good. However, there's times when you get to an area where you get these lines that get out of whack. So in other words, the Case-Shiller index gets unusually far apart from the CPI. That happened during the financial crisis. And eventually what happens is after the bubble bursts, and the bubbles can last a long time. This one lasted almost like a year and a half before it came crashing down. And then that happens. The economy usually is in a recession. They lower interest rates to spur things. Growth starts again, and the whole process renews itself, and off it goes again. So here we are now, and there's many reasons we're this high. One is, of course, inventory has been fairly low up until recently, based on the fact that people weren't selling their homes because they wanted to stay where they were because they had low interest rate mortgages. All right, so that was one reason why you haven't seen a flood of real estate on the market. That's actually increasing though, so that's actually a good sign. The other reason why it took off from here is you had COVID, you had stimulus money, mortgages were kind of easy to get, and so forth and so on, and people were moving away from the big cities. So that spurred a lot of home buying, especially in the suburban areas. So now what I want you to look at though is where prices are now and where the CPI is. And if we take a look at that distance and then take a look at the distance of where it was during the financial crisis, we're about twice as high now, or twice as bubbled as we were before. So that concerns me a little bit. I'm a big believer in things come back into norms. And I think with real estate, we probably will see a fairly significant correction across the country. So those two lines get closer together. And I think that's coming. All right. Of course, if I had the perfect crystal ball, I could tell you when, but I don't. Nobody does. But so I think it's more of a matter of when versus if. Okay. It's coming. It's just a matter of when. So I just like to cover that because I think it's important. There are some things that have been changing in the real estate market. We had interest rates drop down to 6.29 just a month or so ago, and now they're back up to 6.91, almost to 7%. So they've gone back up. But I don't think interest rates at this point, a half a point either way, are really going to make too much of a difference. I think what has to happen is home prices have to come down to levels where they are affordable once again. And I don't think that's happened yet. Inventory is increasing, but actual sales have been extremely low. In fact, I think I read something where they said sales haven't been this bad since like the 1990s. So pretty sluggish sales out there across the country. Again, real estate's local. Your area may be better or worse than the average. But anyway, I think right now prices are still up there. They haven't come down. However, if a real sale is made, there is negotiation going on and prices are coming down. Also, too, the new home builders have been in direct competition with the existing home sales, and they have an upper hand because they can buy down interest rates, offer free appliances, and that, of course, brings people into them, especially with interest rates now, once again, close to 7. If they can buy down your interest rate to 5.5, it's pretty tough for an existing homeowner trying to sell their home to compete with that. So that is also kind of causing a little bit of trouble in the markets as well. All right, so keep that in mind. All right, so a couple books you may be interested in. I've got some on money management. My newest book, The Art of Trading, is on the far right. All these are available at Amazon or your favorite bookstore, rather. Same thing with our software. I'll put some links if you're interested in our software as well. All right, so let me come out of here real quick. And I want to take a look at the Dow Jones Industrial Average on the live charts. So we can certainly see, I'm going to focus in on this chart in the center. So I'm going to open this one up. And you'll see some things on this software you may or may not be familiar with. And that's, of course, a lot of that is our software. And we are using the Ninja Trader charting platform. All right, so we had a break in the trend line, this trend line here, going into this week. And now since the election, here's the jump up that we've experienced since the election just last night. So now we've taken out this high here. So we got a new high. So now we can adjust the trend line and bring it down over this current low. And so there it will sit going forward. Now it's gapped up. Gaps have a tendency to get filled. All right, but we could go higher. Here's the upper range of our target, the lower range. And so this is the 47,000 mark I was telling you about before. It's actually right around 47,000, I think 400 and something. So it's very possible to get up here, but we are in a target zone. And so again, that concerns me because I'd love to see the market go up, up, up and keep going up. But usually that does not happen when you're in a target zone. It could go up a little further, but something usually stalls it out. So we'll have to keep an eye on that. And in the meantime, from a technical standpoint, we're going to watch this trend line. We're going to watch this support level. We'll watch this one, and see if they hold during the next pullback. But until then, enjoy the ride. If you're long current stocks or anything like that and have not been stopped out, you certainly can adjust your stops at this point. And again, enjoy the ride. So I think that's kind of what we're seeing across the board on all the indexes. Let me just look at the NASDAQ here real quick. I'll change that over and give that a second to load up here. Okay, so we're getting a little bit, there we go. Okay, so there's the NASDAQ market here, and again, climbing towards its target. The interesting thing about the NASDAQ, it has not quite hit its target yet, but it is on its way. And with the S&P, same, very similar thing. I do want to take a look at GBTC, which is the Bitcoin ETF for Bitcoin. And as I said, we're hitting the $60 mark. So we're heading on up there as well to the target. Now, one of the interesting things of Bitcoin that I found kind of surprising, actually, is that when I first started investing in it, I thought it would be a tremendous hedge against the stock market if the stock market falls. But from what I've seen recently, it tends to move as the stock market does. So that's kind of interesting that the target on Bitcoin is 72.56 up to 92.84. And don't forget, this is GBTC. So in that case there, what we're looking at here is this going to reach the high at the same time the stock market tops out? So we'll keep an eye on that and see what happens with that. But basically, I was hoping that people would go into Bitcoin if the stock market sold off, because they would view it not only as a currency, but as some place of safety, especially if the dollar gets devalued. But so far, that really hasn't happened. It has moved fairly consistent with the stock market. So we'll keep an eye on that for sure. All right, so let's take a quick look at gold here real quick. And that has pulled back dramatically, okay, especially since the market's done so well, not surprising. So basically what happens with gold is when the market goes up, all right, surprisingly like this, people will pull money out of it because they were getting a little fearful of the market during the election and put it back into stocks when they see it flying again. So gold, people will sell out of some of their gold. So that may be what we're experiencing now. But again, look at the long-term chart on the right, which is the weekly chart, and we're still above the trend line. So the trend is still okay. We have broken this trend line. We've got a major support area here. So we'll see. We are getting bearish divergence. So, you know, gold probably is due to come down. I mean, look how much it's gone up. But I don't think we can really say at this particular point we're seeing a change in trend. I would just call this a pullback currently. And then finally, silver, I'd like to take a look at as well. And silver, we kind of anticipated getting up to 31.89 to 35 before a pullback. And look, that's exactly what happened. So that was a top there. And we may get a bounce back up, but pretty darn close to that target on the top side. So we'll see. So I am showing one of our indicators still showing green. So it looks like basically this should recover and go back up into the target zone. So there you have it. Pretty decisive move down recently. Again, when stocks went up, this really came down quite a bit. All right, one last one actually two more I want to look at really quick is UNG, which is the ETF for natural gas. And on this ETF, we made one more low recently. All right, so we bottomed out here again. And so we're watching for signs of life because this has been coming down for so long. We're kind of like waiting for a bottom here to take advantage of a long trade to the long side. So we'll keep an eye on that. But so far, no go yet. Okay, it's still in the process of coming down. And then TLT is the final one I want to look at today. And this is for bonds. And on bonds here, this has come down quite a bit. We'd love to get long on bonds too, but some of our software that we use, like the PTF and so forth, which is our proprietary software, is indicating the bottom's not in yet. So maybe coming back down and forming another low on that as well. So maybe if the stock market goes up, TLT will continue on down, form a bottom when the stock market tops, and then it will be a good buy. So we'll keep an eye on that one as well. All right, so that is it for this week. I want to thank everybody for tuning in. All right, this of course will be recorded, or was recorded, and will be left on our YouTube page. And we'll be back next month with another update. But what I want you to be careful about is the fact that we are in a target zone on the Dow. So let me bring that Dow Jones up again. Currently, it's heading on back up. So right now, the bull trend continues, but it's continuing within a major bull market target zone. And if this ends in this target zone and we go into a bear market, it's going to be a big one, probably a 50% correction at some point, simply because it's gone up so much since 2009. So we'll keep an eye on that. But who knows when the party will end. But according to this, it should end at some point. And I'm thinking probably anytime between the end of 2024 into the first quarter of 2025. But we'll see. Okay, let's wait and let the market break some of these support and trend lines before we start worrying about it. All right, so that's it for now. Have a great one, and we'll see you back here next week. Thanks so much. Oh, and one last thing, don't forget, on Friday, we have Stock Analysis Friday here on YouTube. And if you have any stocks you want me to look up, bring those and I'll analyze those. Even if you're long in current holdings and you want to know a support area for possibly a stop exit to get out if things turn sour, I can give you that as well. So just let me know anything you may be thinking of buying as well. We'll take a look at that. One thing I would say is at this particular point, since we're in the target zone, I probably would not recommend buy and hold investments at this point. I'd probably wait for the sell-off and then recommend some of those. All right, so that's it for now. And Gene has posted, let me just put this up here. Gene's posted the Stock Analysis Friday presentation that we'll be doing on YouTube. So hopefully we'll see you there. All right, thanks everybody. Have a good one.